Good evening, guys. Today is the 27th of October. It is Friday, end of the week. Thought I'll do a quick check on the markets. For the day, the market, specifically the NASDAQ, was up about 47 points, about 0.3%. Much stronger open than a close. If you look at it early in the morning, it went up almost about 100, 200 points, somewhere in the 125 points, and then ended up much, much lower. So not a great close, but a good open. And if you look at the week, for the week, Nasdaq down. Now entering, even on the weekly, it's getting closer to the 200 moving average. So this is going to be tough. It's going to be tough for a little bit more. But as soon as it gets into the oversold territory, somewhere in the 12,339 mark, which is about 300 points below, I think that might be a bounce before. But we'll see when it goes. The S&P 500, on the other hand, and the Dow both were down today. S&P 500 down about 20 points, about 0.4%, and the Dow Jones Industrial Average, down a little bit over 360 points, about 1.12% actually. This was a much more difficult index. As we had mentioned at the beginning of the week, the Dow, definitely look at the resistance that I'm expecting, the support I'm expecting is the 32,167, 157 mark, somewhere in this range. So that's when I expect it to start going back up again. But until then, this is going to be pretty tough. All right, so one of the companies that came up with, based on very good earnings, is a company called Deckers Outdoors. They make shoes. So they make shoes like Hoka running shoes. They make UGG shoes, very good brand. And let's go through a 5-step process. They went IPO quite a while back. So this company has been public for a little bit of time. We always start with the fundamentals. Let's start with the financials, start with the annualized revenue statement and income statement, and then go from there. So roughly about 1.7, 1.8 billion in 2016, growing in the single digits, and then suddenly started doing much better since 2020, growing about 20% almost, and then 23% increasing growth, and then slowing down to the mid-teens, which is not bad for a company doing about 4 billion and a consumer brand at that. Roughly about 50% gross margins, and roughly about I'd say a little more than about 5%, closer to the 10% mark, 10 to 15%, actually 15%, actually, this is good net margin. So this is not bad at all. You look at it from a quarterly basis, again, revenue was up to about 30% in the early part of 2022, slowing down. And then this quarter seems to have gone up dramatically again, 24% growth. That was the reason why the stock has shown up on the radar. Roughly about 50%, as I said, and net margins about 20%. So this is actually a very good high margin business on the bottom line. If you look at it overall, look at about 53% and 16, 17% net margins. It's not bad at all. Price to sales ratio is about 3.2, okay, for 20% growth, but very good price to earnings, 20%, 20 in the range for 20% growth. That's pretty good, especially with such high, good 16% margins. I like this quite a bit. Overall, the financials look good. After a string of single digit, it's starting to grow back up again, would be my expectation. So let's go look at now the technicals. Overall, I like it. I don't think there's anything particularly in terms of even yellow flags. I see 2 billion in cash, roughly about 200 million, very manageable debt. I like it. I like it quite a bit. It has been on a tear, absolutely. From its IPO, it's been a steady riser. It had a big drawdown all the way into 2022, like with the rest of stocks. But since then, it's on the very long term, on the monthly chart, this is actually on a very good uptrend. Look at this. This would be the solid uptrend that is in ad. Very, very good uptrend. And then if you had to draw some of this is the top level resistance, but I suspect it's very much closer to where the top is. So this is going to blow past a lot of resistances right now. It doesn't have any big resistance upwards for you to worry about. Very good green peg. Oh, this is beautiful. I absolutely love this. I'm going to adjust this a little bit on the weekly chart. This is a very nice candle, very nice green candle on earnings. This would definitely, you look at a lot of the companies that have had a very good earnings candle like this, they flag somewhere either upwards or flat over here and then head up even higher. This has no resistance. Deckers is something I would definitely be watching. See, it's gone through a bunch of resistances that it had before, but since the move up, it has been consistently moving. And if you look at the personality of the stock, look at this. This is likely what I would expect from the stock. Nice green candle, moves up, and then higher highs. So at least for the short term, I would like it to be able to go. This moved like from the 300 zone, 377 zone to the 420 zone, 440 zone. It's about a 40-point move. That's something what I would expect over here. Close to a 10% move wouldn't be out of the ordinary for Deckers. So look at the daily candle, the daily chart. On the daily chart, broke through a bunch of resistances, looked like head and shoulders formation was formed, broke down, came in the end of the earnings. It was actually in the 481 range. So, oh my goodness, it gapped up and gapped up hard, went up 100 points almost today, 20%. That is ridiculous for a stock with 15 billion market cap. It added $1.5 billion to its market cap just today. No big resistances. I would expect this stock to actually move up in a flag somewhere in this range and then head even higher. Deckers, like it a lot. Check out the stock. Thank you guys very, very much. It's actually the only, look at all of the candles. The moving average is starting to point up, and the RSI is getting into very high territory. So expect a little bit move up. It's probably another 10, 15 to 20, 30 points, and then head a little bit down over here would be my suspicion. Thank you for subscribing. Follow the YouTube channel, and I appreciate it very much.